Right.
Well, you've been saying that your ETH trades like a stablecoin these
Oh
days.
God!
So.
Don't remind me.
It's going
Don't
up.
remind me.
It's going up slowly.
I love
So.
pain.
Yeah.
I hate returns. That's why Pranav's the portfolio manager.
I just have a different pain threshold. Yeah.
Exactly. Hi, my name is Liz Yang, and welcome to Crypto Builders of New York City, a show that shines a spotlight on crypto founders, builders, and visionaries right here in New York City, the crypto capital of the world. Today, I'm excited to welcome the VanEck's Digital Assets Alpha Fund team. We have Pranav Kanade, who's the portfolio manager, and Laura Vidiella, who's the head of investor relations. VanEck's is a family-owned asset manager with over $180 billion in AUM. It was an early pioneer with gold investing, ETFs, and digital assets investing. Welcome, Pranav and Laura.
Thank you.
So I wanted to talk to you guys about your journey in crypto over the last couple of years. Pranav, we can start with you.
Yeah, I think the story goes that I saw him on CNBC in the summer of 2021, and he was talking about like crypto markets or something at the time, and I sent him a cold email with some thoughts, and I was like, hey, I think you want to do more stuff in crypto. I would love to talk to you more about it. And then he responded back with like, hey, you have a great background and great resume, but like, what the hell do you know about crypto? Like very literally. And so somehow that ended up with us getting on a call on like a Saturday, and we talked a lot about sort of where the industry was, where it could go, and what sort of a good hedge fund product, what could that look like? And my perspective at the time was really coming from sort of having been investing in the space personally much earlier, and then observing other fund managers in the space and identifying some white space on sort of things they were doing right and certain things they were, I think, not doing right. So I pitched what I think it could be, and then I think he found it pretty interesting. And we talked probably for like several months, and then convinced him to help us get started, and then we ultimately started in 2022.
Nice.
Yeah.
And Laura, I was actually just watching your Bloomberg interview from 2022, and something that I thought was really funny was that Bitcoin was like at 19,000, so we've come a long way. But talk me through from your vantage point how, institutional crypto has shifted over the past couple of years. I mean, there's been so many things that have happened since then.
It's funny because that interview was peak right before the FTX bankruptcy. So that actually shifted a little bit, the before and after, where
No way.
the cycle before that, I feel like between 17 and 21, a little bit of 22, a lot of institutions were investing into venture funds. Some of them also did liquid, more in the venture than liquid, but there was a lot of capital coming into the space, right? Fast forward to the bankruptcy, everyone pulls their capital out, right? It becomes riskier, reputation of these firms. They don't want to be damaged, so they stay away from it. So for the next few years, I think all the way till probably last year with the new administration being more friendly and everything that's been happening in the past 12 months, there's been more appetite again, slowly coming back, slowly exploring. And over, I'd say like Q4 of last year, institutions have been engaging a lot more actively. And now I think this Q1 to Q2, we're going to see a lot more, right? So from our side, at least, we've been having a lot more conversations, and it's funny, these are sometimes the same people that were looking at funds from like 3-4 years ago, right? And some were telling us that they were trying to reach back to some of the other funds, and those funds are not around anymore, sadly. But yeah, they're re-engaging again, so I think it's all positive, and it's more about, all right, what's the difference between the previous cycle and now, and how should I build my portfolio now, and how should we move forward?
So I'd love to hear from you both as well. What is the state of crypto investing in 2026? So we'll kick it off with Pranav.
Yeah, I think we talked to a lot of our clients about this, which is if you, I look at it from the standpoint of when we started our fund and sort of what's happened in the markets. And you've kind of, I think the day we started our fund, Bitcoin was maybe around 20K. And obviously now we're sitting in the 90s. In the same time frame, if you look at the performance of altcoins, it's probably down. So the market cap of all altcoins is more or less about the same as it once was at kind of last cycle highs or near the last cycle highs. But what you have is an exponential growth in the number of tokens competing for that same limited pool of capital. And as a result, the performance of tokens are just down. So I think you have one dynamic where people who are looking at the space are kind of saying, why do I need exposure to all these other tokens? Like because the performance doesn't tell me that I need to go get exposure to that.
Right.
And then also, many people are looking at it and saying, I don't really understand what these tokens are even about.
Which is also a fair point.
Yeah, it's all great points, right? And I think, I guess in our case, in our strategy, we invest in both equities and tokens. We are agnostic to the underlying instrument. We're just trying to find great businesses that can compound capital faster than most other markets. And so we've tilted our exposure more towards the equity side over the last 18 months. So our, performance in general has more or less separated or gone differently versus the altcoin market. My honest response to most allocators are that, most tokens are going to continue to go down in price. There's like a really big market structure problem with altcoins, but that's not where I think the alpha and the returns are in the future. And that's not where we're spending a lot of our time.
I see. And Laura, from an investor relations vantage point, how has it been, with your LPs in 2026? Like, what are their top of mind questions?
I think one question that they always ask, and Pranav, you've gotten like 10,000 times, is how do you compare the fund to Bitcoin, and why should I invest in Bitcoin over your fund?
I was literally going to ask that as a benchmark.
Yeah, and I'll let Pranav give his answer here, but for me, like a few words is, all right, if you want to get into AI, are you going to put all your eggs into NVIDIA? Or are you going to look into another basket, some ETF or something that gives you exposure to everything, and potentially even more depending on if there's another winner within that basket, right? So you probably you have a different answer or similar answer.
I have more of like a fundamental kind of answer to that question, which is, if I just take a step back and say, what does our industry offer to the world? It's probably something like store value is one. The ability to cut costs is one by leveraging, let's just say, a better stack. And then the third one is enable net new experiences.
Right.
What I focus on are the latter two, which is things that can help the legacy system save cost and time, and the things that can enable net new experiences. So the whole thing around tokenization, in my opinion, is enabling net new experiences. That's why I put that. We can kind of unpack many parts of it. But so I think there's three different bets here. And obviously Bitcoin is one part of that bet, the store value bet. And I think it's not a great way to compare the other two to this one. I think they're just different, and they have different reasons to be a part of anyone's portfolio.
Yeah, no, it makes a ton of sense. It kind of harkens back to a couple years ago where people were like, crypto doesn't make sense because, well, it'll never replace fiat. And that's not the point, right? Because money also serves many different purposes.
Yeah.
So Pranav, I'd love to hear from you. I think that with every type of asset, there's always some kind of cultural context which enables it to be successful. So, for example, Bitcoin came about because of the 2008 financial crisis. And so I'm curious to hear from you, what do you think are the different confluence of factors today that have led the crypto market to be how it is now?
Yeah, I think there's several things. I think one, so I'll take a step back again. One of the things that I was so excited about when I was coming into the space was this potential that tokens are kind of the next, is the evolution of traditional capital markets. Like, I think tokens, well-designed tokens are better than stocks and bonds, is how I thought about it, because I come from the public equity and public credit world. And the example I often give people is something like Binance, which is, CZ built a great product called the Binance Exchange, and then he created this token called BNB, which was, back in the day, was capturing a lot of value from the trading activity on the exchange. And then he used this token to then grow his customer base, engage them in a different way than a traditional exchange could. So essentially, if you held BNB, you got discounted fees, you got to participate in ICOs, and all these different things that you could do. It aligns kind of this like owner/customer element to it. And my general thesis was that all companies could benefit from having a tokenized equity, or having their equity be on a blockchain rather than in a kind of a dumb ledger, because then they get to kind of align their customer with their owner. So,
you mean like customer rewards and
discounts,
and
essentially, right?
and
Like if you look
that.
at just most internet companies, like B2C internet companies, then stats are that they spend between 25 cents to 40 cents of every dollar of revenue on Google and Facebook ads. I think of that as like leaking value to a third party,
right?
So to the extent you can minimize that ad spend and use your stock as the vehicle to get customers, but also retain customers, I think it's a better closed loop system. So my view was, I think, people would look at what the crypto industry was doing in terms of this element around tokens and say we should also do that. Now, we got completely sidetracked because the regulatory environment didn't allow for the tokenization of equities. And so what you ended up with was, let's just say, for lack of a better word, the only thing that had product market fit was things around gambling, hence meme coins.
Sure.
And that also fits a certain need, which is you have this, in a bigger kind of, as you said, cultural context, I would almost say like socioeconomic context, you have sort of this wealth gap widening.
Definitely.
And affordability is the biggest thing on top of everyone's mind. And people feel like the only way out of their current situation, where everything is kind of unaffordable, is by gambling their way out of it.
Yeah, it's like a big swing, right?
Right.
It's like things aren't going to pan out, so I might as well try the crazy thing.
Right.
Right.
And I think that's what meme coins ultimately provided.
Right.
So I think you had that moment with meme coins. May or may not come back, right? I don't really know. I don't really have a sort of a great thesis around the sustainability of sort of people gambling on chain. I can make a case either way.
Would you say that that's been taking over a little bit now with prediction markets?
Yeah, I think prediction markets is
totally.
kind of like I think people now want
and Polymarket.
Yeah, I think betting on sporting events, intra-game bets, all these types of things. Prediction markets make it very, very easy and more intuitive than the traditional kind of bookie, whatever, DraftKings model. So I think maybe some of the capital has gone there. Some of that same kind of gambling capital has gone into the equity markets in sort of a lot of like, let's just say, out the risk curve AI names. So I think that there's always that energy that wants to gamble. It's just at this moment not in crypto.
I saw you tweeted about this quote from Elad Gil where he said that some industries are more startup industries, as in value accrues to startups, and some are more incumbent-focused industries. So an example is in the early days of the internet, a lot of value accrued to startups, right? Like Google and Amazon. But with mobile, a lot of value accrued to then incumbents, which were Google and Apple. So where does crypto sit on this spectrum, in terms of benefiting startups or benefiting incumbents?
Yeah, so because our strategy allows us to kind of go anywhere between equities and tokens, we debate that question at sort of a book level all the time because, do we think the incumbents are going to come and ultimately generate most of the economics from this industry, or is it going to be the token-backed or token projects that ultimately capture all that value? And the debate to that question then ultimately downstream flows into how much of our book is going to be in equities versus tokens. And I think if you asked me this question in 2022, I would have taken the position that it's going to be the crypto native projects that were launching tokens, and our portfolio sort of was positioned that way. As time has progressed, we've ultimately landed at this place where we say it's probably going to be the larger incumbents that figure out which parts of the stack a la carte do they want to come and use and then leverage for their own benefit, and then ultimately capture all of that value. And that view is expressed in how we are sort of positioned from our portfolio. I'm trying to think about like why that's the case. And I think if I were to like oversimplify it, I think through the Gensler years and even since, the best talent of founders are not coming into our industry. I think they're probably looking to build something in AI. And at some point, they're going to look at our industry and say, is there something here that I can leverage for my AI business? And so that is not a pure play crypto project.
Yeah. I mean, it makes sense. I think also founders are building where there's VC dollars, right?
Yep.
And I think it's just much drier on the crypto VC side.
Yeah. I used to believe that liquidity early is probably a good thing to bootstrap network effects, right? So the stat that I used to go to was companies go from seed round to IPO in an average of 7 or 8 years. In crypto, things go from seed round to token in 18 months, maybe less.
Yeah. Right.
And I used to think that's like an interesting dynamic because on the one hand, it gives people in the market exposure to venture-like assets early, and that liquidity is also potentially a good thing if you're essentially looking at network effect businesses and you can use that liquidity to bootstrap those network effects and maybe accelerate them and so on. If you have a good core business, having a liquid token to then kind of engage either side of your supply and demand is probably a good thing. So I used to sort of think about the positive of that. I think the ultimate negative of that is that that dynamic of early liquidity just ends up attracting the worst founders.
Oh yeah, 100%.
Yeah, because I think we just attracted. I think you had this problem where like I think founders were coming in with like, intellectually interesting stories, but like no product market fit, and partnering up with like intellectually interesting VCs that can always tell you a great story and write a nice little blog, and they all kind of got together and said, all right, 1 year lock, let's launch a token, let's rip it, and then like not worry about what I'm actually building. And I think that like the entire industry overplayed that game. And so and then the kind of the end result of that is like you launch all these tokens, useless tokens that have great stories but no use.
Yeah, for sure. I mean, quite honestly speaking, I think a lot of founders probably just launched tokens to be able to harness that liquidity for themselves and also for the company. And they tried to retroactively justify like why the token was needed, and the token was not, 99% of the time, the token is not needed at all.
I mean, I don't think the products are even needed.
Yeah, the products aren't needed either.
Like, why do we need like 10 bridge projects? Who's even using this stuff?
Absolutely. There's just like no use case for it.
Yeah.
So I want to turn things to, the New York City mayoral elections. So the outgoing mayor, Eric Adams, recently launched his meme coin, ticker NYC, and immediately rugged. And now we have a new mayor, Zoran Mamdani. And so, Laura, I'm curious to hear, what does that signal about what's important to the people of New York City, and what does that mean for crypto in general?
I'm not that much familiar with what Zoran wants to do with crypto, to be honest. But I was at Eric's roundtable back in May.
Right. At Gracie Mansion.
Yeah. And I mean, it was interesting. I was, I forgot what's the exact name, but moderating one of the roundtables, getting people's ideas and writing everything down. And one of the main ideas was actually the token, right? So it's funny that it came out this week.
The NYC token was
there were a lot of ideas. That was one of the ideas as a way to like promote the city and bring entrepreneurs here and have them build from here. So the idea was not bad. The execution maybe could have been a little different. I mean, a lot of other great ideas came out of it, but it was just coming to the end of his term, I guess. So it was just hard to see what you want to execute and what you don't want to execute. So I don't know what will happen with all those ideas. But other ideas of like making New York a sanctuary city would have been fantastic, right? And those were also things discussed that it's a bit more complicated because there's other levels of politics that I don't know, and I don't know enough about it, so you can't really just front run and decide, okay, we're doing this now, I guess. But yeah, I don't know. I think to me it's more important what's happening down in DC as opposed to what's happening here, because that's ultimately the decision maker. And I am very, very excited about the market structure bill.
Absolutely. I'm
excited that Coinbase also said, "Hey, we're not supporting this," because I think it's a win for the industry. Delays things a little bit, but I think it also shows their support, which it's important. But yeah, specifically for the city, I'm not following that closely what Zoran is doing on the crypto side.
Yeah, I would take the politics out of the situation for a second. I would say like the whatever Adams did was such a wasted opportunity in some ways, because I think. Part of the reason I think obviously Mamdani got elected is around this issue of affordability, and I think his number.
He also did a great social media campaign.
He's great at all that, right?
Yeah.
But I think there's a true problem of affordability. Like I think this is kind of widely discussed, but housing is just too hard, like unaffordable, and I can see many use cases for a token to bootstrap like more housing development, right? Again. I'm making stuff up here on the fly, but I think to the extent you can convince a bunch of New Yorkers to support a token in some ICO form where that token is entitled to rent revenues in the future, but then it's used with maybe accelerated permitting to build new buildings for affordable housing. Again, I'm making things up, but like I think there's some interesting things you can explore there.
Yeah. Right.
Where I think the biggest question people ask is, Zoran, you have all these great ideas for housing, but your budget is what it is, and you have to then go fight with like the governor of New York for a bigger budget, who and then who are you going to tax? How are you going to, it's all these conversations around taxes. I think tokens can play an interesting role, or in terms of raising capital from a very captive social media audience that seems to love him, to then bootstrap this vision that he's got. So I think there's like a lot of unexplored territory there. But then the outgoing mayor launching a meme coin and then rugging it or whatever is like.
Right. Bad for optics.
Yeah.
I actually quite like that. And it's a very nuanced take, because I feel like a lot of the times in tech and in finance, people like hear Mamdani's name, they're like, no, he's the devil. But he's the mayor of New York City, and over a majority of the city voted for him. So obviously there's appetite for his messaging.
Yeah.
Sorry, were you saying something? Or
no, I just had another thought, which is when you have situations like this token from this week, that also affects on the bigger scheme people like on our side that we're trying to raise funds and anything like that, because you see the institutions or more traditional finance saying, all right, this is really cool, I'm excited to look more into it. And then you have it happened with like Libra in Argentina. It happened with like other kind of tokens. Like, okay, we thought the crypto was finally moving away from these things, and now they're just coming back, right? So just to say, it's sad that sometimes we focus attention on that, but there's also a lot of incredible things that for some reason are not gaining that much attention that are very positive for everyone in the industry.
What are some examples that come to mind for you in terms of things that are more under the radar but are positive developments for
I mean,
crypto?
to me, the number one, and I think everyone agrees, is just stablecoins, right? That's been
absolutely.
the biggest use case. It's helped a lot emerging markets be able to, Argentina again, not to name it again, but it's fantastic example of how they've been able to to use it for sometimes your day-to-day transactions, hedge against inflation. Been there a few times, and I've been able to pay my guides there, or even anything else more, I don't know, anything more on the tourism side with
totally.
stablecoins directly, and they love it. They'd rather have it that way, right? And it's instant and easier for them. I've helped also some of my colleagues, industry colleagues that maybe have families down in Colombia, Peru. They're like, hey, we're trying to figure out how to send them cash faster. And it's just like, well, set up a Coinbase account here and limit account down there, just to name a few. There's obviously other platforms, and just transfer it that way, right? So that's an incredible opportunity that I think bigger companies are going to see the value more and more, and are going to start looking into it. And yeah, that's just to share some positivism.
No, it makes a lot of sense. I mean, the US, we're like the frog in the well, right? We see a lot of like gambling use cases. We're like, oh, crypto's a scam. But it is true that Latin America itself is the fastest growing region for adoption of crypto. I saw some stat online that said that something like 80 to 90% of all crypto transactions in Brazil involve some kind of like pegged asset. And, you know, there's obviously demand for this type of thing. It's crazy that we think about the volatility in crypto, and a lot of these Latin American countries, holding crypto is less volatile than actually just holding their fiat currency. I mean, how crazy is that?
Right.
Well, you've been saying that your ETH trades like a stable coin these
Oh
days.
God,
So.
don't remind me.
It's going
don't
up.
Remind me.
It's going up slowly.
I love pain. I hate returns. That's why Pranav's the portfolio manager.
I just have a different pain threshold. Yeah.
Exactly. Cool. So I'd love to talk to you guys about the Digital Assets Alpha Fund. So Pranav, walk us through the investment thesis of the fund.
Yeah, I think the thesis all evolves, right? Because we're a liquid strategy, we get to sort of anticipate where the world's going about 12 months ahead, and then sort of position ourselves to what the world most likely looks like. To kind of give you an example, election happens, and then we ask, okay, what's the first thing that will happen in the world? And we said it's probably going to be stablecoin legislation, and everyone's going to be thinking about stablecoin issuers. But we said, let's go explore the companies that could be the beneficiaries of the growth of stablecoins through cost savings. And so we looked across a variety of sort of tech companies and ones where interchange fees were a big part of their cost structure. And then we asked, could these companies somehow leverage stables to reduce that interchange? And then we ultimately landed on one. We made that investment last year, and that ended up outperforming most crypto tokens last year. And it's a large cap tech company.
Oh,
so,
wow.
So I think that's really what we're trying to do, which is I think traditional equity investors are always going to be one step behind in terms of understanding sort of the things happening in crypto, or at least what the technology can offer. And to the extent we can find who could be the future winners and position ourselves there, we can generate a lot of returns. So to the same extent, if you ask me, what is that thing today that the rest of the equity world is not thinking about, or equity markets are not thinking about as it pertains to our industry, I would say it's the things around tokenized equities. Being able to, I think there'll be, once you have Clarity Act in place, I think you'll have a set of first movers who will tokenize their stock because they can then use that tokenized equity to grow faster than their competitors.
So I'd love for you guys to just cut through the hype in terms of tokenized securities. There's a lot you see on social media in terms of its potential and what it can do and the valuations that it can achieve and all these kinds of things. What is like the cold, sober take around tokenized securities? Like, what is the use case? What's the opportunity at hand?
Yeah, I think everyone likes to focus on the cost savings and the instant settlement and the global access. They're all great. Like, sure, those are all just marginal benefits, I think, versus the legacy system. But I think the biggest killer feature is the fact that you can now use this asset that's your stock as the reward instrument to grow your core business. We wrote about it in one of our previous investor letters, but if you go back and read the Figma S1, they have the ability to issue shares on a blockchain. in their
What?
S1. Yeah.
They had that in their S1.
In their S1.
That's crazy.
It's authorized and the board can decide at any point to then kind of
I
issue
think it was
that.
September, October.
Yeah, whenever the S1 came out. Yeah. And I think I would encourage people to read it, right? So they have this ability. So, what does Figma do? It's a piece of software, a SaaS company that allows people to kind of design and build their websites and apps. They're kind of like the fast-growing incumbent to compete with Adobe, and they're better than Adobe in many ways. And what makes their product really good, I think, among many things, is that third-party developers make tooling for those apps, for Figma, to make it easy for other people who are building their app to then leverage those tools. So in our letter, we then kind of used their imagination and said, okay, to the extent Figma does issue these tokenized shares, what could they do with that to grow their business faster?
Interesting. So what you guys say is examples for things they could do.
So again, this is a hypothetical I wrote in our letter, and here's what I generally said, which was, if Figma can figure out which developers are creating tools that engage their customers better, i.e. generate more revenue from existing customers, then you should be rewarding those developers more. So you can programmatically create a system where you said, these developers that create these tools, if these tools are used more, you get automatically X amount of shares in the company. Then you create a lot of stickiness with the best developers for your platform. And then that in turn increases potentially what you can monetize on the customer side, on the revenue side.
Are there any companies doing this in practice today?
Hyperliquid probably, right?
Oh, yeah.
But I mean, Hyperliquid's like an L1 token, but again,
right.
similar-ish idea, right?
Yeah.
And this is gonna go where I go back and I said, this is what CZ nailed with BNB.
I see.
Yeah.
Okay. And looking over the past couple of years, what sort of learnings or takeaways have you had as portfolio manager of the fund?
Yeah, I think it's funny. So we did our kind of webinar for our investors yesterday. And our first slide was like learnings from 2025.
Oh, okay. Topical question.
Yeah, so it's like top of my mind. I think that the first one for us was, we still are playing in the token world. We're still involved in the token world. But I think we fully accept that token markets have changed and that sort of the days of like alt season are no longer ever going to be the case. So that's my view. I could be wrong. But if you take that for granted, that alt seasons are never coming, then what you have is a market that is essentially a structural bear market, but also one where more people are going to start to believe that this is a structural bear market for altcoins. And then that presents opportunities where you have individual tokens that can have massive outperformance for a variety of reasons. So we're kind of going from, so that means for us, rather than sitting there and analyzing every new token launch and learning what every token in the top 100 is doing, it becomes more about building and having tools that helps us identify sort of breakout tokens early enough, and then asking, is this kind of breaking out for the right reasons, or is it just sort of some manipulated thing from some founder or something, right?
What's an example of that model in practice?
Yeah, so without getting into any specific kind of token names, when I look at the world today, I can tell you how we are going to look to find these things. So there are only a handful of crypto projects that have what I would call a moat. Most crypto projects can easily be copied and forked and sort of replicated in many ways. So we have a small list of names that we think are creating real value, that have a moat. And then these projects are also charging money for their projects and they're generating fees. And at the same time, you essentially have, and those fees are making their way back to the token in some form of buyback. And these tokens are also have a down-only chart. So when I think about flows, we've built a system where we said, is there a point at which the buyback in the order books is large enough relative to market cap where it's going to then overwhelm any amount of sell pressure? So that's kind of like one of those tools we built for ourselves. And I think that's going to be like answering that question is going to tell you which tokens are kind of interesting.
So I wanted to talk about the allocation of the fund. So I saw as of the end of last November, I think around 50% of the fund was allocated toward crypto-related equities, around 25% toward tokens, and the remainder in cash and stables. So why the emphasis on crypto-related equities as opposed to the underlying tokens themselves?
Yeah, I think it kind of goes back to that sort of view that distribution is king. And so we believe that in our industry, distribution is more valuable than the underlying technology itself, because the underlying technology can be easily forked. Like case in point is we can all agree that the EVM is great, but that doesn't necessarily mean ETH gets all the value from the growth of the EVM. And like Tempo is like the perfect example of that. To the extent Tempo is successful, that's great for EVM adoption, but that doesn't mean anything for ETH, the asset, right? But that does mean that something great could happen for the companies that are using Tempo as a blockchain, as well as a way to leverage stables and so on. So that's kind of the simplest logic I can give you, which is the companies that have millions and millions of customers, that have great kind of founders and teams, great product people that know how to delight their users, who also deeply understand their users, can then look at our industry and say, are there things I can use from the blockchain world that ultimately enhance my core business? Mm-hmm. And we've seen people do that very successfully. To give an example, I think Vlad at Robinhood has done that really, really well. Mm-hmm. We think there'll be other people like that that will do it just as well, if not better, in other industries, perhaps in e-commerce, perhaps in banking. So I think there's going to be other verticals where these companies with distribution that really know their customer come and kind of leverage the stack, especially post-regulatory clarity.
Mm-hmm. And I also wanted to talk to you about Nubank, which is a company that you've written about. So talk to me about your conviction in Nubank and where you think it fits in the crypto landscape today.
Yeah, it's kind of interesting because as we've done more things in the equity world, a lot of people who are looking at us are asking this question of like, what makes you better than any other equity investor kind of coming into investing in equities versus tokens in the space. And I think Nubank's like a good example, like where I can make that case. We wrote about it in our last investor letter. And here's the simple kind of perspective. The world knows that Nubank's a great business, has a great founder, has a dominant market share in Latin America. It's the biggest bank in Brazil, and it's a dominant player in all of LATAM. And one of the things they did on the crypto front was they enabled an easy way for their customers to hold stablecoins. They're recognizing that their customer probably wants access to US dollar type products. And then in September of last year, they filed for a banking charter in the US. And if you kind of read any sort of sell-side equity research report or sort of, just look at what people are saying about that, nobody really thinks they'll be successful, right? So it's kind of like, the US is a very competitive banking market. Nubank, as great as they are in LATAM, we don't really know how they're going to be successful in the US. That's the perspective people take. We look at sort of how they originally grew, which was they delighted a small number of users, and then that spread word of mouth, and then they kind of grew their core business through that organic sort of delighting the users approach. And we look at that and say, can they replicate something like that in the US? And let's make the assumption yes. Then the question is like, given what they've been doing in crypto and given how their go-to-market has been in LATAM, what would they do here? And this is just our guess. And I put on this hat, if I was running that company, what would I do? And it's very simply start with the Latin American population in the US that has a lot of family back home. That family back home likely also has a Nubank account. And tackle the remittance market. Give people, instant settlement, maybe give it away for free for it being your banking customer, right? So I think there's a lot of unexplored sort of product space there. And I think the optionality that Nubank can be successful in the US is mispriced.
Yeah, I think that's interesting. That's a great contrarian take. And I have some, personal experience in terms of sending money across borders. So I used to work in Germany, and but I would convert my salary and send part of it back to the US through Wise. And I think when you're an American living in America and you have access to the US dollar and it's super easy, like you can't really understand like why some of these financial products have a fit, right? Because everything is just laid out for you.
Right.
But when you have personal experience like living abroad or having family that's abroad, I think you feel the friction in the market. And so
this, by the way, this is Germany, US. Imagine,
yeah, I know, right?
Yeah, I've had the same. I've had really bad experience between Spain and US as well, where same day send the same wire, the same amount, and like just separate times of the day. The first one settle in 3 days, no problem. The second one took 3 weeks.
3 weeks?
3 weeks.
Did they give you a reason why?
Because the intermediary bank, which I won't name, lost it. Yeah.
This can get lost? I didn't know that was a possibility.
That's what.
Yeah, exactly.
I don't know.
Tweet
maybe
them
not.
at them.
Maybe not. And the moment I called, they figured it out, but like it took me calling, right? If I had not called, they who knows?
Yeah. They just be forgotten forever.
As opposed,
Wow.
and this could be something that could have been settled in like 5 minutes or whatever time
Right.
it takes to settle in the blockchain, right? So
No, for
1
sure.
millisecond.
1 millisecond, but sometimes it takes 30 blockchain confirmations to show on your account, right?
Yeah.
So
Yeah, exactly.
yeah.
And speaking of companies that target Latin America, I also wanted to ask you guys about Mercado Libre. Like, how do you think that fits into the broader crypto landscape? They're the Amazon of Latin America. They do so many different things.
Yeah. I think the thing that's interesting about Mercado Libre is their Mercado Pago product. And they have this thing called Meli Dollar, which is, essentially, I think, a stable coin in the back. And again, it gives... so the way that product actually works is if you're a Meli Plus customer, which that's kind of like the equivalent of Amazon Prime in my basic understanding, you can get rewards in Meli Dollar. And ultimately, I can see a world where they let you spend that Meli Dollar on the existing products. And if you are able to do that at scale over time, then as Mercado Libre, you could probably start to minimize how much you pay to the credit card system in fees.
Yeah, that makes a lot of sense. I mean, credit card companies, they really have so much capture when it comes to e-commerce.
Yeah.
So I'm also curious to hear how you segment, this market of crypto-related companies whose equity you can invest in. I mean, there's many different categories.
Yeah.
So what is an investable category for you?
Yeah, I think we kind of look at most categories as investable to the extent that industry can leverage the unique things that our industry can offer. But the bigger question we often start with is, do we actually like the underlying business? So to give you an example, last year when we were looking at sort of the stablecoin winner sort of category, we looked at like a number of the traditional remittance players. Some are like been around for like 100 years plus type thing. And yeah, could they leverage stablecoins to enhance their business? Sure. Do I like their management teams? Probably not. Like they're a crappy company for a reason. So
Name and shame.
Yeah, I won't name anyone. But like I think these big companies have like a lot of inertia, and I think if the market thinks you're a crappy company, it's for probably the right reasons. And I think I would rather not like bet on a turnaround because they can somehow leverage a stablecoin. So that was kind of one thing we said. We don't like these core businesses and we don't like who runs them, so we're not going to touch them. Another category was, people asked us about sports betting as a category. And I think, if you kind of look at any of the big sports betting players, a lot of their customers tend to move money in and out constantly, right? And like, people go bet on a sporting event and then they'll make some money and they'll want to take it out right away.
Right.
And they'll pay fees to do that.
Right.
And that's like another perfect kind of vertical that stablecoins could attack. And we thought about that a lot. And ultimately what was happening there was we thought their core revenue models were at risk. Even though they were good businesses, their core revenue model were at risk from prediction markets. And so I think our key in all of this is that we have to like the underlying business a lot and the sort of the future prospects of it for it. And we also have to like the management team and the founders and believe that they can leverage the technology our industry brings in the right way. Like the wrong way, in my opinion, was like, if you remember last cycle, when some of the luxury goods manufacturers were like randomly launching NFT projects.
Yeah, totally.
Yeah,
There's
I'm like, what are you doing?
Consortium of like luxury, like authenticating on the blockchain.
Yeah.
yeah.
But like, I'm like, why? Like, why do you need an NFT project?
Yeah. Short answer, you don't.
Yeah.
Even red tuna was being authenticated on the blockchain. I remember.
What was that?
Red tuna, like food,
like
basically.
Like sushi tuna?
Yeah. Walmart also had some supply chain.
Oh yeah, no, it's
blockchain
like,
validation process, right?
Absolutely, yeah. I had a friend who bought like a box of pasta, and it was like, this pasta's on the blockchain. It's like, okay, who cares? Yeah, like literally, who cares?
Yeah.
I think there's a problem with crypto overall. Sometimes it's like you want to do things because of the technology and not because like anyone wants it.
Yeah.
And I think that's why AI is kind of eating crypto's lunch on the talent side.
Yeah.
So when you think about, the composition of your portfolio, do you think there is a future in which it would be more heavily skewed toward tokens or?
Sure. Yeah. I think I could, I was actually having this conversation with someone this morning. They asked me the same question. I said, I see a world where that could be the case. And that is also a world where the tokens are more equities, right? Like they're tokenized equities.
Right.
But perhaps they don't like right now when we think about tokenized equities, we think about the existing set of public companies that can then have a tokenized representation on a blockchain and then do interesting things.
Yeah.
But there's also again, this is all probably going to happen post Clarity Act, post some rulemaking after that, all of that, right? But you know, I was making this case to someone, which is if you think about sort of people using AI for coding and like, you know, vibe coding and all these things, you kind of have the big kind of incumbents, which is, you know, Codex at ChatGPT and then Claude Code at Anthropic. That seems to be like the big ones that people are using. But then you have these players that sit on top of these, like a Lovable, Replit,
right.
And there's one other that I'm not thinking about. Anyways, there are a bunch of these guys. Oh, Cursor is the other one, right? So when I think about like the little guys, I almost think of it as like the story of like little tech versus big tech. And if I'm like Lovable, Cursor, or Replit, one day it might make sense to not have an IPO in the traditional sense, but just have a exit on a blockchain in a token form. Again, have that token be the equity, and then maybe use that to then catch up to the big tech guys.
Interesting. And what would be the pros and cons of that?
Well, I mean, I can make the pro, which is perhaps you can then grow your customer base faster because you can create some reward incentives by giving them equity.
Right.
And you can do other things, I think. The con is really simply that the crypto market, like if the markets are bifurcated like they are right now, which is you have the TradFi markets and you have the crypto markets, then the crypto market is very, very small. And so the market might not price your asset well. That's the negative. Now, I think over time, again, if you go back and look at what the DTCC announced about a month ago or so, with their no action letter with the SEC, I can make the case that these two worlds are more or less going to converge. So this bifurcation of like crypto here, traditional markets here is not going to be the case.
Yeah.
And if that happens, then the market size is big enough so that that like you're entering into a small market by launching a token instead of, you know, IPOing on the traditional markets. That difference wouldn't exist.
Yeah, more and more I do think you see that convergence, not just on the structural side, but even on the product side, right? Like we're talking about gambling and prediction markets. It's interesting, on TikTok, I get a ton of Kalshi ads. And I had a friend the other day who was like, oh, I made like a bet on Kalshi. I was like, do you know that's crypto? And she's like, no, not at all. So it's pretty cool to see.
Well, I would make the case that Kalshi and Polymarket are actually not crypto.
Oh,
right?
Okay.
But they've done it the right way, which is like their order books don't sit on a blockchain, right? It's all like
I guess
centralized.
Like,
but like what they've done is like they've made the movement of money in and out of their platform super easy. So you can come through ACH wires, credit card, or you can use crypto. And crypto's faster and you can all that,
That's true. That's actually a really good question. Like what is or is not a crypto startup? Yeah, because more and more I think the lines are blurring a lot more.
Well, I think it goes back to like, if I were to simplify it, maybe the answer is like crypto isn't the entree; it's like a side dish, and that's okay.
It's an accoutrement.
Yeah,
that's
totally okay.
On the side.
Yeah,
makes sense.
And if you accept that as the reality, then perhaps you would invest very differently. Perhaps you wouldn't go chase like random token projects.
Totally, and I think it makes a ton of sense too, because if you look at, for example, the open source software movement, it started out like crypto, very ideological, and then over time, you know, like as it becomes more and more mainstream, I think just by the nature of it, people don't care so much about like where it came from, right? They just care that it's a good product.
Yeah.
I want to close things out with a round of lightning round questions. So what is your most contrarian take in crypto at the moment? I'll start with Pranav.
Ooh, I didn't even think of this. You go first.
I'm going to take yours. Kalshi Polymarket, not crypto.
That counts. That counts.
I mean, again, this is contrarian for a reason, I guess. But this has been explored a little bit in the past to sort of this intersection of like biotech and crypto, right? I think biotech seems to be at an interesting place where you can get kind of these breakthroughs by leveraging AI for drug discovery, but the entire world has been so burned on biotech. If you just go look at like biotech stocks, I mean, they're trading at pretty depressed valuations in general.
Right.
They're better than where they were maybe 12 months ago, but they're still kind of on a grander sort of longer term time scale, you know, still way off like sort of the upside optionality they might present given what's happening in AI. And I think it might be interesting to sort of bootstrap interesting biotech ideas, especially things around like longevity where the payoff is not near term. In the crypto world, because crypto has like that appetite for like sort of that risk appetite for crazy big ideas that where you don't need an immediate payoff.
Right.
So I think that category of biotech and crypto could be interesting.
Somebody call Brian Johnson.
They've been trying to grow it for a long time. Actually, that's one of the ways that got me into crypto back in 2017. There was this 23andMe on a blockchain as opposed to I think it wasn't it Genome?
Yeah, I remember that. Yeah.
Right. That they were trying to say, well, if you have all this data that you're selling to 23andMe and they're selling it, you should get a piece of it. Right. So the idea was like, hey, just select what project you want to sell your data to, and you make a cut out of it because they buy your data, right?
Does that mean your gene mapping's on chain though, like fully public?
Well, I mean, it's supposed. Yeah. I guess it's supposed to be encrypted, right? And to some extent, and
I'm sure someone will tell you this whole story around ZK proofs and how this will.
For sure.
ZK solves this.
Yeah. But no, there's also the point of like financing these projects, right? Like a lot of these PhD projects, the issue is that, like there's whatever university that is making a big piece on a specific product, but it's funded by some large company and they have a very specific need of what they wanted to find, and they don't share like most of the other findings that might be interesting for everyone to know. It's like very skewed towards like what that company wants as opposed to what the researcher wants to do, right? So if you have some sort of like crowdfunding platform for PhDs to be able to do whatever they want, that's a win. And
I mean, just like a totally random category, like unrelated, I guess. Like I was taking some time off for the holidays, and I was going down a rabbit hole on peptides.
Oh my gosh, peptides are the hot topic.
Yeah.
You know about the peptide rave?
No, I don't know about the peptide rave. Maybe you can tell us.
No, there's like you didn't hear it. The New York Times covered it.
No.
So there's a woman on crypto Twitter. Her name's Chairman Bernanke. She had a birthday party in San Francisco, and it was a peptide rave sponsored by a peptide company.
Oh wow.
Yeah.
Okay.
But sorry, you were saying.
Oh no, I was just like, I find peptides really interesting as a category of like ways of approaching, again, longevity in medicine. And then I started going down this rabbit hole of like, why hasn't this gone mainstream outside of GLP-1s, which is, again, I guess a peptide as well. But like outside of, BCP 157 or whatever I might be butchering that peptide name, but that one is the one that people seem to say solves a lot of like muscular pain problems and whatnot. I was looking into like, why has this stuff not gone mainstream? And it seems to be because there's not enough I guess clinical studies to support these things going more like that FDA approval route.
I see.
And then the question is, well, why hasn't some big drug company figured out how to commercialize this?
Right.
And it seems the answer seems to be, well, like the margins might not be as great with that stuff because this is like easily.
It's like not worth investing.
It's not worth. It's not worth putting the money in because the ROI might not be there.
Right. Yeah.
And I was like, seems like a problem that crypto can solve potentially because
crypto solves this.
Yeah, as in again, crypto people have like a lot of risk appetite and have a lot of like sort of they don't need a near term payoff.
Right.
So for really moonshotty ideas, like I think it could be an interesting place.
Yeah. Okay. So I will close things out with a final question. So if you were stuck in an elevator with a legendary investor and you could ask them one question, which investor would you pick and what would you ask them? I'll start with Laura.
Gosh, no, you. I think it's Pranav. I need a minute to think about it.
You should say you'd pick me.
You pick Pranav.
I'll pick Pranav.
I'm kidding.
Pranav's right there.
No, don't do that. It's so bad.
Okay, Pranav.
I would probably pick Stanley Druckenmiller.
Okay.
And it's kind of interesting. I was like, again, one of the things I was doing in the holidays is like watching a lot of old Stanley Druckenmiller content.
As one does.
that's how I spend my free time. And one of the things that jumped out to me is in one of his interviews, he talked about how he lets a chart lead the way rather than a fundamental thesis lead the way in many ways. So
what does he mean by that?
So he's like looks at a lot of price charts,
right? And
he has like a lot of technical indicators that he looks at, and only when those things check out will he then dig into the fundamental thesis of something.
Oh, I see.
Yeah, so
like
said
metrics
differently
first, and then
not even metrics. Like
people,
like Buffett would be like, I look at the financial statements, right, which makes sense.
Right.
But it seems like Stanley Druckenmiller,
like pure,
like he'll look at a price chart and
technical
technical analysis.
I see.
Like as in, he'll even say like he won't invest in a bad business if the price chart has bad technicals, kind of thing, right? So the technicals lead his filter process.
I see.
So if I were to share an elevator ride with him, I would ask him to teach me as quickly as possible his favorite technicals, because that's not what I do. So it's something I'd love to learn from him.
That's a good point.
I'm blanking on his name, and unfortunately, he's not around anymore. I think he died last year.
Who, Charlie Munger?
No, he is the father of quant and systematic trading.
Gene Simmons?
Yes.
Yeah. Is it Gene Simmons? No, sorry.
It's not. It's
No.
not from Kiss.
Yeah, sorry.
No,
Something
it's
Simmons.
Simmons. It's
Yeah,
Simmons.
Yeah, Renaissance.
Yeah.
But I forget his
We gotta
first
cut all
name.
this.
Yeah, no.
I
I
can't
forget
tell.
his first name.
Hang on, I'll look it up.
Okay.
Okay.
Yeah.
I love that picture of him.
Jim Simmons.
Okay.
Jim
Close,
Simmons,
very
yeah.
close.
Same thing. Maybe my Spanish ear didn't hear the difference. Okay, I'd say mine would be Jim Simmons. And that's just the previous one I worked at was Quant Systematic Fund, still is. And back in the day, I used to go down the rabbit hole a little bit more on the more like the, I guess, like call it the CS side of how all of this fund started. And I don't know. Personally, I think it would have been really cool to see the transition of Wall Street when it went from paper to computers.
Yeah, that's actually really interesting.
And I would love to hear like the experience of that process and how
Right.
they changed over the past like 2-3 decades. Yeah.
So
Right.
like the rumor is that Renaissance figured out LLMs before the rest of the world figured out LLMs.
I saw a tweet about that.
Yeah.
That's so fascinating.
I need to put this in like a Claude like deep research study to figure out if it's actually true. But like that's how they have like some crazy returns. They don't take any
Right.
outside money.
Right.
Yeah.
Their secret
There you go.
sauce.
Yeah.
Awesome. Well, Pranav, Laura, it was a pleasure chatting with you on the podcast. Thanks for coming in.
Thanks for having us.
This is fun.
And thank you for tuning in to Crypto Builders of New York City. I'll see you next time.